All right, well, welcome to the Bitcoin podcast. Today we're joined by Jack Watt. Jack's an economics writer focused on Austrian money theory and Bitcoin with an undergraduate degree in physics, which is very interesting. But interestingly, he's a commercial pilot. He's written for lots of places, for Mises Wire, Power and Market. He wrote a chapter in a book, The Satoshi Papers, which is where Kale and I came across your writing, Jack. And he does a great job breaking down some pretty complex ideas about money into things that make sense. Thank you for being on the podcast, Jack.
My pleasure.
So just to kick us off about your background, how does somebody go from doing your studies about physics to flying planes and then thinking deeply about money?
Well, when I was a boy, I was always interested in financial markets because I just viewed them as a way to make money without really doing anything. So I was interested in stocks or shares, as we call them, things like spread betting, which is a kind of tax-free way of playing the markets. And I reluctantly went to university. I actually just wanted to be an airline pilot, but at the time there were no ways into doing that unless you have a lot of money. So all my teachers and my parents told me to go to university, and it just so happened that I was best at maths and physics. So I ended up studying physics, and it was an interesting experience. Whilst I was there, I realized that probably the best thing to do was to use that degree to go into finance. So I got involved in all like the investment society, and we set up a kind of trading floor type thing. We'd do all kinds of financial markets type games. And through that, I ended up getting on the summer analyst program at Citigroup. And I worked on currency trading desk, G10 Spot FX, and euro rate swaps, which was derivatives trading desk. And that was really good. I got offered the opportunity to stay as a graduate. But in the background, when I was in my penultimate year, my current employer was a major airline. They started doing a sponsorship program. So I applied to that, and I also got on that. So I kind of was at a fork in the road, and I had to decide whether to stay in finance or go and do what I always wanted to do. So I chose to be a pilot. And in the meantime, I've essentially done everything the wrong way around. So after work, sitting on a trading desk, not really knowing what was going on, and seeing all these kind of ad hoc explanations for why the dollar went up on a given day in the Financial Times and stuff like this, I kind of started to think more deeply about how markets are actually driven. And so I kind of ended up getting into economics. And so I was self-taught, really. I just read a lot. I initially was interested in the kind of monetarism. So the kind of things you'd read from Milton Friedman,
Mhm.
guys like Thomas Sowell. And then during COVID, because the government essentially banned us from flying, so I kind of thought maybe I'll go back into finance. I actually did a course in monetary economics, and kind of got formally associated with some of these thinkers. And I actually read, whilst I was doing that, Carl Menger and his Principles of Economics. And I found that of all the writers I'd ever read, what he was saying made sense from first principles in a way that I didn't think any of the kind of macro thinkers did. So from that, I got into all the Austrians. And since then, as I say, I do everything the wrong way around. I've at the moment, I'm currently about halfway through an MSc, a master's in economics, which has been very mainstream. It's essentially just mathematical econ. And so it's been interesting to fill in the gaps of the things that I was maybe naive about.
And I wonder if perhaps you've got things the right way in uh, how you're approaching things. I mean, do you, as you're taking some of those master's degree courses, do you find yourself arguing with
Well,
Keynesian
I think,
economics, or more?
I mean, yeah, I mean, I imagine you'd probably view it differently to how my lecturers do, but you kind of got to play a game, haven't you? Because you have to demonstrate that you understand the concepts that they're teaching you, but at the same time, you do want to kind of make your own little points. You know, for example, I wrote something recently about optimal tax theory, and so I was kind of thinking, how can I get something in that I actually agree with here? So I kind of read a lot of James Buchanan's stuff, criticizing this kind of Ricardian equivalence idea, which I found quite interesting because obviously Buchanan won the he's another economics Nobel winner, so he's well respected even in the mainstream. But he was very much took the other side of most arguments, much like people like Hayek and Mises would have done. So yeah, it's difficult because you do sometimes get marked down. If you toe that line too hard, you get marked down. So you do have to be careful.
You give me a flashback to a mathematical where we're going through essentially the proofs for the quasi-concave utility function, which is at the heart of most microeconomics.
Mm.
And you have to make a certain assumption about people's risk preferences. And I said, what if? And I'm an entrepreneur. It's like, but what if? Well, then you throw the whole thing out.
Yeah, I mean,
So how useful is it?
yeah, I mean, I think a lot of, if I'm being generous, I'd say that a lot of the mainstream models, it's not, it's not that they're wrong, it's just that they're never really applicable. And I think knowing the limits of the models is the most important thing. And I think that a lot of people kind of get too abstracted away from reality, and so they want to view reality where you've got nations that are just in so much debt that they'll never get out of it, and they're saying, well, if everyone was rational, then they would increase their saving because they know that debt is actually going to be taxed in the future. It's like, well, if you just look at savings rates, that just obviously is wrong. So it can sometimes be an interesting way to look at stuff. Some of the mainstream models are interesting enough, but yeah, I think you have to take them with a huge pinch of salt. And I think this is why, I mean, my interest in just reading is always led me to the history of thought and to methodology. So I've read a lot of all the Schumpeter's History of Economic Analysis. I love Rothbard's History of Thought. Even Mark Blaug, the kind of mainstream historian of thought. All these guys I find fascinating, and the philosophers of science as well. And when you take all of that and you kind of then look at all the economic theory through that lens, then you can maybe try and place them. But yeah, I think most people don't view it that way, and they just try and naively apply things where they just don't apply.
So you mentioned the role of first principles as you were doing some of these readings, Jack. My own observation of economics, and I came back to Iowa State University as a professor after a career as an entrepreneur, and so I'll definitely look at practitioner. But I found when I tried to address some of those first principles questions, students actually found that really interesting. And so this goes back some distance, but I was doing some work in Tanzania. And so I asked a question, why is the United States richer than Tanzania? And started to do some reading on that and found out how inequipped economics is to address that. Grappled with it for the last third of the class that I taught, and students were really engaged in that. More recently, and perhaps to your work, again, first principles sort of questions, what is money? What makes for good money? Kind of what's been your exploration of that sort of first principles question, if you will.
Yeah, I mean, so I guess the major piece that I missed out of my explanation was Bitcoin, really. So I heard about Bitcoin when I was at university, and one of my kind of early reflections that I always kind of thought about in as time went on was how when I was doing a physics degree where nobody cared about finance or markets or whatever, there was a group who knew about Bitcoin and they would go on and on about it. And this was in like 2012. And then when I'm on a trading floor in central London or in Canary Wharf, I didn't hear Bitcoin get mentioned once. And so I found that interesting as time went on and Bitcoin became more of a known idea. Um, but I guess I try to rationalize Bitcoin and Bitcoin success through the I through thinking about money, and I think that's why I found Carl Menger's writing so interesting. So his on the origins of money. I find that in the current, or in I say current because I think people are always moving beyond this, but currently people talk about Bitcoin as a store of value, and obviously there's kind of on the other side, people will point to writers like Mises who talk about, well, it has to be a medium of exchange, and that's how something becomes a money. But it can happen in ways other than that. And we're already in a monetary economy. We already have money prices. Um, all of the fiat monies are effectively enforced by law. So why would anybody go around really, unless you're like an active advocate of Bitcoin as money and you want to use it? You can't imagine. Oh, I can't imagine my grandmother wanting to use Bitcoin and spend Bitcoin. But that doesn't mean it's not good money. And it also doesn't mean that something that doesn't pass hand to hand in trade isn't necessarily ever going to be a money. It just means that right now it isn't. And when you look at in history, this is what I tried to do in this my Satoshi papers piece. It's not always that the means of payment is money. So gold and silver was money in this kind of 18th century era. But actually, in many cases, what was settling trades, especially between merchants, was actually credit instruments, these kind of private credit instruments, which called bills of exchange. And it just means that for one single actual money gold transaction, you could have 50 transactions being settled from person to person. Um, and when the original person who the bill was drawn upon and who accepted it, when the bill comes mature and he has to pay, if he doesn't pay, then everyone along the chain who endorsed the bill, because each time the bill's used in payment, it has to be endorsed by that person, they can then be legally pursued in reverse order for payment. So you have like as these bills move around the economy, they become more and more secure. Um, and I think that's the kind of thing, because we've kind of been spoiled by how easy it is to transact in money, or what we perceive to be money in the modern economy, that with the modern banking system, credit card processors, most of our transactions are just settled by Visa or MasterCard. And people don't give a second thought to the fact that they're having to borrow in money markets, and they're having to match all their outgoings, their incomings. That's all just done behind the scenes, and there's no reason why that kind of thing couldn't happen with Bitcoin. Um, and I think that was kind of the point I was trying to make in that paper.
And we've written about some parallels to that. In the early 1930s, when the U.S. was in a Great Depression, there were bank closings, and there was truly a lack of money. And so this small community in Northwest Iowa, led by a state legislator with the last name of Zylstra, started a scripts program that's much like you're talking about. It was these bills that would pass and people would sign them, and there was a certain number of slots that were on that, and it promoted commerce, and it attracted reasonably positive attention for a while it worked. And so people can figure these things out.
Yeah, I think that one of the things that I've, in the time since I wrote that paper, one of the things I've thought about a lot more is the kind of evolutionary aspect of just the way that, if you just look with fresh eyes at how the current system works, it's pretty crazy. I mean, you've got shadow banks, you've got like crazy money markets going on all the time that seize up because the repo markets too many. There's too many claims on the same treasury bill, and all this kind of thing. And central banking, open market operations intervening all the time, cooking up these new ideas and new schemes all the time to keep things, to kind of grease the bearings of the system. It's really crazy, but this is what people do. They through their desire to trade and to have complex structure of production, they just come up with new ways of making it work. And Bitcoin slowly inserting itself into that system, and so it'll be interesting to see how it evolves. And I think that there's not going to be like a step change all of a sudden. Oh, we're in a Bitcoin standard, whatever. But Bitcoin certainly is part of the equation now, and it's going to become a bigger and bigger part of the equation. And whoever can accurately forecast how it's going to work will probably end up having significant power in that new structure. And it's not necessarily what the kind of utopian Bitcoin view is, that everyone's going to be their own bank and all this. I have a lot of sympathy with that, but I just don't see um, it evolving like that. You're always going to have some kind of centralized parties, and you're always going to have some kind of power structure, but it will be massively, massively reduced by Bitcoin, and the fact that Bitcoin ultimately, when you take recourse to the blockchain, is nobody can stop that from happening as long as you can afford it. Because I think that's one of my other takeaways is essentially that transaction fees will reach a point where it won't just be a throwaway amount of purchasing power to give away to take recourse to the chain, increasingly as time goes on.
Do you speak, I think you wrote about the Lightning Network in one sentence. Are you an advocate for the Lightning Network as well, or do you think that will be abandoned for Bitcoin
Definitely.
dollars?
Yeah, I mean, something else I've done was I ran for a few years a company with a friend, and we ran Lightning nodes, and it was mainly for online commerce, but we did actually do it for a few conferences around Europe as well. And to be honest with you, it was quite a painful experience, um, because you'd be trying to sell a book or something, for $10 worth of sats, and someone will try and pay you, and the transaction won't go through, and it will turn out it's because they're using a non-custodial wallet, and they haven't set up any channels. And so you kind of, okay, I'll quickly open a channel with you, and I've got a channel to this guy who's connected. So if I do that, it'll go through. And then, of course, on the other side, you have people who are using wallet of Satoshi or whatever, and it's just, it just goes through, no questions asked. In terms of, do I advocate Lightning for kind of everyday commerce? I mean, it can work if you know what you're doing, but you have to kind of be a Bitcoin enthusiast, unfortunately, a lot of the time. But I just read the other day, there was something written about the economics of Lightning at the moment, and how it's still the case that if you're a payments provider, I was kind of a bit annoyed that we didn't carry on doing this, because we could have been making 6%. People are
Yeah,
making 6%, and they're leveraging one Bitcoin something like 70 times, because it's just such a high throughput network that you can leverage one Bitcoin 70 times and of course the fees are so small, but because it's such high throughput, you're still generating a 6%
yeah,
yield. So Lightning definitely has a place, and actually it's the transition from. So when I'm writing about Bitcoin bills, of course the problem is no producer is paying their suppliers in Bitcoin right now, outside of very limited circumstances. And if that's not the case, then Bitcoin bills will never take off, because you need somebody to want Bitcoin credit. They need to want to borrow in Bitcoin. And why would you do that if you can go and borrow in dollars, in a depreciating currency, for pretty cheap? But if you look at the Lightning Network, it's making Bitcoin productive. And the way that's being done is that the Bitcoin itself is facilitating the movement of other Bitcoin. So it's very important to get from Bitcoin as the kind of a kind of speculative store of value to, or a kind of hoarding, to Bitcoin actually being used in a productive way that has a yield. And if you think whatever Michael Saylor's accrued by now, if he could use that Bitcoin for the Lightning Network, I mean, it would be terrible for current node operators, because they'd have to get a lot smarter. But it is the case that right now, most routings from one party to another, actually, each channel is a monopoly operator. So they're effectively giving away their channel, the use of their channels, for way cheaper than they could. So there's a lot. If there's more Bitcoin flooding into channels, then I think that we'd find a kind of rebalancing of everything, and the node operators will become a lot cleverer. They'll probably be using AI, and you'll be able to connect everyone in the world to this. I know there are people have written about the ultimate capacity constraints and everything, but of course it's a lot higher than the chain itself. So yeah, I am definitely an advocate, and I think it's going to be the most important piece of the puzzle for making Bitcoin productive and yielding over and above just a kind of store of value, or do we think the number's going to go up kind of asset.
We're living some of the challenges that you indicate in building software, so the nodes that we deploy in agriculture can do Lightning payments essentially back and forth. So how do we make it reasonably seamless?
Yeah. How have you found it? Because I mean, I guess you must have a kind of network of people who do want to be using Bitcoin, I assume.
We're right at the beginning. Relatively new, and there certainly are developers that have worked on it, but Kale, I don't think it's mischaracterizing to say that there's just a lot that needs to be done to develop it further, and a lot that needs to be done to make the user experience for the average person much more seamless.
Yeah. I mean, that's what I found. I found that so we just had a Lightning node that we had backup power to and everything, so it was always up. But the balancing and all of that, to do that in an efficient way, was really difficult, because the user experience was just so painful. Unless you really spend a lot of time learning how to do it, it's not. But on the other side, that's why certain node operators are successful, because they learn how to do all that and they can do it efficiently.
So you talked about the evolution and perhaps the more utopian Bitcoin visions may not be the way that the world evolves. I had lunch yesterday with another economist, somebody who has their PhD, works in the private sector now, and he just hasn't thought much about. At one point, he just looks at significant change, like government won't be able to spend like it does today. So his question to me was, if you tell me that's going to change over the next 25 to 40 years, okay. But if it changes that way in the next 5 to 10, there's some significant dislocations that are in the future. And I won't ask you to predict the future, but how do you speeds it up, what slows it down, what could happen along the way, and what it might look like.
Yeah, well, I mean, there would be huge dislocations. The problem is that when the first party decides that what the path that we're on now, and when I say party, what I really mean is a central bank, most likely. The first central bank who realizes that actually maybe the best thing isn't to have these kind of ultimately antagonistic foreign currency denominated reserves. That's not the way to go. So we can't be running, because then, like for example, the US. So China's been running a huge surplus. The US has been running huge deficits. It's helped their asset markets, but at the expense of things like affordability for property, and things like this. So it's ultimately antagonistic. China can say, well, okay, we're going to dump all your debt, and so it becomes a big geopolitical issue. If a central bank decides that we're actually just going to build up a Bitcoin reserve, it doesn't mean that they have to run surpluses with anyone else. It just means essentially they have to print their own currency to buy Bitcoin. So there's devaluing of the currency, but they do that anyway a lot of the time to buy the government debt that is relentlessly issued and maintain their policy goals. So once that starts to happen, it will increase the ability for Bitcoin to absorb huge amounts of liquidity, because the central banks will be very powerful buyers. And as that happens, it also increases the respectability of Bitcoin in the eyes of people who don't understand it, and kind of always just look to the government for, oh, can I do this? Companies as well will realize, oh, if the central bank's doing it, then maybe it's okay for me to do it. And so as this happens, you're going to have a big kind of snowballing effect into Bitcoin, and hopefully it allows an effective price system to be maintained as the fiscal positions of governments deteriorates. Because I think that's what I'm most worried about, is ultimately the price system kind of just being destroyed, and our insanely complex global structure of production being unworkable, without effective prices. Of course, it's not going to be perfect, because the liquidity of Bitcoin, even once one or even two central banks start doing this, isn't going to compare to the global kind of fiat capital markets. But that's what I'd say is the next thing to be looking for is serious central bank reserve accumulation. And I don't think we've really seen it. I know that there's people say that Iran was mining Bitcoin. There are some nations that have been doing, Bhutan, kind of small players there's been talk of, but there's no major player. And I would guess it's because the IMF, I don't think the IMF really would like to give away the keys to the kingdom to or essentially just throw them into the pit of Mordor, like, because that's what it would be, wouldn't it? Giving up on all that power. But it's going to happen because the game theory requires it to ultimately. I'd like to think it'd be America would do it, but I don't know if any of the realistic governors of the Federal Reserve would do it. I think someone like Judy Shelton maybe would consider, although she may also just consider building a bigger gold reserve. I don't know, but you need somebody who's like kind of comfortable to be criticized and outside of the mainstream to really get that ball rolling.
Considering most of the cabinet members in the current administration hold Bitcoin, our incoming chair of the Federal Reserve holds Bitcoin. Is there a chance for a federal government to make some move and actually make what they've talked about, that sovereign Bitcoin?
Yeah.
Trying to balance a lot of things.
I think the US has as good a chance, or a better chance, than any others. I mean, I don't see it happening at the European Central Bank. They're the only other one that's really important enough to, for it to really make a big difference. I can't imagine the Bank of England doing it. So yeah, it would just kind of have to be the Federal Reserve. And it would make sense. It would make the most sense for them to do it because they need to get on another. They need to get on another ship, essentially, as the kind of China crediting unwinds.
Admittedly, Jack, I've wrote about this quite often, and it's my speculative theory that I think Kevin Warsh will do this, and his coupling with Trump. They've hinted at it kind of the whole time. What are we going to do to get rid of all of our debt? He said we're going to pay the other countries a little bit of Bitcoin. So I think Kevin Warsh will come in, cut rates, do exactly what you said, buy a bunch of Bitcoin with it, stack up a reserve, and then maybe, he uses that to clean up on the back end for our economy's purpose. But then, yeah, they're the first players to benefit from the game theory of,
Yeah, for sure.
competing
Well,
first.
yeah, I mean, I'd be interested to read that actually. I don't know a whole lot about Kevin Walsh, to be honest. I wasn't aware that he was particularly into Bitcoin, but that certainly sounds promising.
Yeah, it
The
has me
Lightning
excited.
services providers, and yeah, he's he is versed. The other thing that you mentioned, Jack, is really interesting for other kind of toppling moments, if you will. Certainly, central banks doing things, but you mentioned those companies at the top of the market cap tables here in the U.S. are bigger than most countries, and their balance sheet. Saylor talking about his experience. The Microsoft board brought him out to speak to them.
Yeah,
It was a bridge too far. Like there's just, and they are a dividend-paying machine, and which is why their shareholders have them or whatever. But I mean, who knows who it is? But Apple, Nvidia, somebody will at some point, with part of their treasury, have Bitcoin, and that it's so anyway. That could be a spark that then gets central bankers everywhere saying, "Oh God!" Like,
yeah. I think they have issues, don't they? Where I mean, obviously, Michael Saylor's been at pains to kind of develop this digital credit idea, and I if I was to put myself in the shoes of the CFO of Microsoft or whatever, I guess I'd be kind of thinking, yeah, but it doesn't produce a cash flow, and this kind of goes back to in this Satoshi Papers thing. I mainly talk about the pure time preference theory, where you've got the present goods, which you consume, you've got the future goods, which is investing in future present goods, and then you've got money. And the problem is at the moment, people get confused between what is saving, just pure hoarding, like Bitcoin, and what is an investment. And so they look at Bitcoin, they go, it's like a speculative investment. And it's like, well, no. And then they go, but it doesn't produce cash flows. And so it doesn't get put into a category for them besides a speculation. But if you've got the Bitcoin and Lightning channels, then and you can generate 6%, then that solves your problem. They're just not. They're not
and appreciation on top of it.
Yeah. I mean, economically, if you get a 10% capital gain, it's the equivalent of earning a 10% yield. You just have to sell the 10% to realize it. Now I understand that if you're running a big company, that might not be practicable to do that. You might rather just have something that actually just generates a cash flow. But I think Michael Saylor's kind of demonstrated that you can pay your liabilities in the form of dividends by just holding Bitcoin and having appreciation by using essentially derivatives in the financial markets. So I think that's a very specialist thing that he's doing, and I can't see Nvidia or Microsoft doing that. But I could maybe see, once the Federal Reserve gets involved, I could maybe see all of them following the lead and saying, oh, maybe this is actually quite a good kind of rather than having these, what they call high quality liquid assets, which are just government bonds. They could maybe hold some Bitcoin and realize that it's also it's a way of having a bit of exposure that's not intimately connected to the financial markets. I mean, is prices, but the actual asset itself is not.
And can I dig in there? Because when you were talking about the first steps to Bitcoin credit, I thought of STRC and Michael Saylor immediately. Are you an STRC enthusiast, and do you see that as the first step to like quasi Bitcoin money markets and whatnot?
Yeah, I think it is really. I mean, it's kind of impressive. The what's he paying? 11.5% now.
Yeah.
And I know, I think a lot of the problem with it is the tax treatment, isn't it? I don't really know the US tax code, but I know that in Britain, that would be taxed in such a way that it kind of makes it not that worthwhile holding. So, and this is another thing that kind of needs leadership from governments, unfortunately. The tax treatment of these things has to be aligned in a way that actually makes sense in accordance with what it is. But yeah, certainly, I think Stretch, if he's accrued so much Bitcoin just by selling, just by selling Stretch, and why wouldn't money flood into that instead of going into a 5% money market fund? Why wouldn't you go and get 11.5%? And I guess a lot of people are just worried. Maybe it's not part of their mandate. Maybe they're not allowed because Stretch isn't, it's not viewed as a money market fund, but it essentially is. But yeah, this is definitely what an early Bitcoin money market would look like for sure.
And if you're a retiree and want to, I mean, why? Same thing, and maybe not a publicly traded treasury. Irresponsible to put that in like a CD that pays 3% or 2% or something.
Yeah. Well, it is really. But people, a lot of what people do is just habitual, isn't it? They just kind of do what has always been done because the rules are made around what's always been done, and so it takes somebody with the minerals to do something a bit different.
And maybe it'll be a grassroots thing as well, which and he's a wealth manager of sorts, but he's a Bitcoin guy as well. And so he's working with a lot of small businesses. And the way he described it was, my typical business is that there's married sisters. They become buddies and they get into their 30s and they start a business together. And by the time they're in their 40s or their 50s, it's a really nice business and they've got 30 or 40 employees. And just for, if it's an HVAC business or a plumbing business or whatever, a home repair business, a construction business, they might have to have a $10 million in working capital that's on hand. And so he's been working with them, and you have to lay into it slowly, but it's like, 8 to 10% of that kind of leaks out every year. And yeah, you've got to have it, but can we start putting some in Bitcoin to where that strengthens your balance sheet ultimately? And it's sort of like, okay, that's pretty cool, because you give that in 5 or 10 years and you take what's a nice local regional business. They have significant wealth.
Yeah. I think a lot of the problem with small businesses is the kind of custody solution. What do? Do they have a multi-sig? Do they just have the treasurer just looks after it or whatever? Could he just run away with it? Or all this kind of thing is I think what people generally get worried about when you propose Bitcoin treasury.
Yeah, again, you flash into the things that we're worrying about as we're deploying this, and so we're doing scenario planning of like what could go wrong, and so anyway, it's uncomfortable, of course, to talk about, but it's like, there's a divorce, or there's a technically savvy teenager who's 16 years old and gets mad at mom and dad and has the keys and runs off with the Bitcoin.
Yeah, and there's insurance there are people who are talking about setting up Bitcoin insurers who would just have a pool of Bitcoin capital, and they just pay out to people who pay them a premium to insure their Bitcoin. So that's probably the sort of thing that's going to be needed, especially for older people who aren't used to the idea that if they just mess things up, all of their money is gone.
Yeah, maybe that again in agriculture gives us a little bit of an advantage. And so agricultural producers have crops that are stored in facilities. They have livestock that's essentially live inventory, and there's risk around that. And the occasional libertarian farmer, let's say, that has silver and gold and ammunition in a safe. Strong self-custody, let's say.
Yeah.
So, yeah, I really enjoyed the chapter in the Satoshi papers about credit and thinking about that. In agriculture, we're a capital-intensive industry. If you're a crop farmer, you pay for all of your inputs way before you ever harvest. And for agricultural businesses, same thing. As an industry, I hope there's some nobility in our cause at the end of the day, because it means we have these live things, and then we process things, and we store things, and we ship things, and there's logistics and all of that. So, credit changes potentially, again, maybe over a long term, and it's an evolution, but how do you think that impacts capital intensive industries, whether it's agriculture or something else?
Well, I think that the kind of business that you're describing is pretty well suited to the kind of early industrial revolution type credit money that spun up, because you probably deal with the same suppliers over and over again. You probably don't have a great pool of options for each thing. So you're going to know who's trustworthy, and you're going to be paying in circles a lot of the time. So I can imagine that the kind of Bitcoin bill idea is especially applicable to agriculture, and how it would actually happen. I mean, it's probably going to, well, it will be digital, and it's probably going to be essentially like a cryptographic bill that every endorser just adds their digital signature to. And when it comes due, you'll get a notification on your phone. You owe, such and such 2.3 Bitcoin. Which wallet would you like to send it from? Bang, done. And the debt's extinguished, and then we go around again. I think that, in those kinds of closed systems, it's perfect. You wouldn't even really need, because a lot of the problem was, I think, you needed a large pool of local savers to provide the liquidity, so that whoever held the bill at any time could, if they wanted to, get money, like money proper. But if you're in a kind of agricultural network, I'm struggling to think of times where you would really want to recourse to the money proper rather than holding these credit instruments, when all of your suppliers are probably happy to take them based on the fact that it's just been working well. Obviously, there's going to be times where somebody doesn't pay, and then you're going to have to go up the chain for every person to get your money back. That's you can get into all kinds of scenarios, like the credit of some types of producers might be more demanded than others, because the demand for their product is inelastic. So if you're in agriculture, I think that most of your produce has a pretty inelastic demand, right? I mean, I know that it's highly competitive, so you can't kind of rip monopoly gains and things like this, but people have to eat, as you said. So you might find that the bills attached to agricultural names might actually end up being the ones that are kind of rushed to if there's any kind of shock that we would call, like a kind of recession or whatever. People would probably want to hold agricultural bills as opposed to tech bills. And
Indeed.
then if you've got some kind of demand for your bills that sends them over par, then you've just been given cheaper credit. So, I mean, in terms of relating that to the capital intensity, I think that's pretty much it, isn't it? Your capital intensive business can just run off pure credit, Bitcoin credit.
Yeah, you give me a flashback to two recent conversations that I had. One with a farmer, and he described where, to your point about you're doing business in the same circles year after year. Anyway, the farmer wrote a check for like $8,000 to an input supplier, so bought fertilizer, pesticides, or something. Put it in our postal mail. Was the next day or two on their bank account and noticed an $18,000 check had been cashed, but he didn't remember having wrote a check for that. Anyway, somebody lifted the handwritten check from the mail, took it out of the envelope, changed the $8,000 and some dollars to $18,000 and some dollars, cash it, and then took another check. And so I thought usually our postal service, although it cost 80 cents per item now to ship, it will soon be to $1. I thought they were reliable, but who knows what happened. That's one story. Actually, a student that has an agricultural business is doing quite well, does wires. So at least you know when you send a wire that it gets there, but it costs $25 every time. And so he said, even just with him starting out in his business, he's like, I spent $1,500 last year in wire fees.
Wow.
So if I could pay peer-to-peer,
Yeah,
in whatever fashion,
yeah. There's a lot.
it should be cheaper than that.
Yeah. There's lots of in the current system, the kind of middleman rent is pretty large, isn't it? You know, if you look at like working down from the big banks who are currency dealers, they generate huge rents from just being in the middle of all these different currencies. Then you've got the MasterCard and Visa. It's just, I mean, they're doing us valuable service for the system we're in, but these things are ripe for disruption. And, you know, if you had a kind of Bitcoin bill system, there wouldn't be any fees. You might have a middleman who maybe is a discounter, so he stands ready to discount your bill at whatever time. But in most cases, I don't see why you would need to get your short term, 30 or 60-day bill cash for Bitcoin now, unless you were having a bit of a crisis. So yeah, I think all of this kind of just accelerates the move away from the status quo.
Yeah, I can't imagine if I was at a large, check it out, Walmart, Amazon, and you look at the feed.
Yeah, it's
You'd
crazy.
certainly be looking at a Walmart.
Yeah. Well, I guess I mean they probably would if it wasn't for they'd probably be legally prescribed from doing that. But I know all of the this is why they love vouchers so much, because of course a lot of vouchers don't get spent, so you just instantly get a gain there. But also you're just getting around the slice that you've got to send to Visa or MasterCard every time after it's been bought.
Forget when it was, but Walmart had tried to charter a bank, and our banking lobby successfully. You can only put your hand in the holes in the dike for so long.
Well, I mean, a lot of them, they are essentially, the way they're run is essentially like banks, isn't it? I know airlines are essentially run like banks, and, they've got their own currency in a way with air miles, and they just devalue them all the time. They lease all their aircraft, which was a clever thing to do because, talk about a capital intensive industry. So they all used to own their aircraft. And then because kind of we've just ended a kind of 40-year bull market in debt, the clever thing to do was to sell and lease back on a variable rate and just keep riding that down. I think now it's probably makes sense to start owning again, but of course people are habitual, so they just do whatever they used to do or whatever the guy who taught them did. And it's only a few clever people who go, oh, actually, we should do this instead. We should set up a kind of Bitcoin related arm that has a treasury, and or maybe we have a Bitcoin miner in an aircraft that uses the spare electricity, which is something I looked at a while ago. But it's it's legally challenging to say the least. They generate a lot. There's a lot of spare electrical capacity in an aircraft at all times, and it's eventually just not used.
I just see the news headlines. There used to be Samsung phones blowing up on planes, and then it'd be Bitcoin mining operations blowing up
Yeah,
planes.
yeah. I mean, on the flip side though, the you wouldn't really need much air conditioning. You just would have a vent to the outside, and you get some cracking airflow over them. But they're heavy as well, I guess, is the problem.
We kind of thought about a similar thing for grain bins, but we'll see how that comes into play.
Yeah, I know that there was in Ireland actually there was a group who were doing Bitcoin mining using cow manure, essentially. But I don't. I'm guessing that it's just so up and down, whether or not it's worth doing. So it doesn't seem to have
I
taken
would
off.
imagine that they're probably doing a biodigester and generating methane or something.
Yeah. Yes. Yeah. Well, you probably get carbon credits for that as well. So you're kind of being subsidized to mine Bitcoin, which is nice.
Jack, thank you for the insights. Why don't we conclude today's conversation with, we talked about evolution. We talked about potentially significant changes that happen, but what leaves you optimistic as you think about the future and money changing?
Well, I suppose what keeps me optimistic would be the long run, because in the short run, I'd say I'm quite pessimistic. So, so I mean, I'm very grateful that we have Bitcoin and it's in its current state um, of evolution, I guess, where lots of infrastructure already exists. It's kind of been battle tested. Bitcoin itself has been battle tested plenty, but we've got all these other things that exist, like Lightning. We've got people. Yeah, I'm quite interested in the Arc protocol and seeing how that takes off. I think that as things deteriorate, at least you can spread the word to people that you care about that Bitcoin is a suitable alternative, and hopefully it can grow as things get worse, so that we can all step off the sinking ship and get on the ship that's actually rock solid, and maintain a price system. So I mean, it's an interesting time to be alive. I don't know, these things can drag on for a long time. I don't know if I'll get to see all of it, even myself. But yeah, I'm very much looking forward to seeing how it all plays out. And I'm very confident that Bitcoin is going to play a very important role.
From Ireland to Iowa. Thank you, Jack.
My pleasure. Take care.
Thanks, Jack. So I'm interested